Hello everybody, this is Ron Wheeler, and what we're going to talk about in today's blog posting is the XTL Breakout Trade. As most of you know, I've been using Advanced Get now for a little over 15 years, and if you would have asked me perhaps 6 or 7 years ago, is there anything in Advanced Get that I didn't use or I didn't, for lack of a better word, trust, I would go out and say, I don't like the XTL trades. The reason that I didn't at the time like the XTL trades, and even to this day, the reason that I'm still not the biggest fan of XTL trades is because it kind of goes against my own psychology. I tend to be more comfortable waiting for the market to establish a trend and then jump into the trend at a continuation point. The type 1 trade, the false bar stochastic trade, and even for some of you that have been to our advanced summit, the XTL continuation trade. It takes a lot of faith and it really takes a lot of confidence in the indicator to try to get into the market at what we think is the beginning of a trend. Now, over the years, I've always taken the questions, hey Ron, how do you get into a wave 3? What's the best way to use the XTL? Over the past few years, I've really come to like the XTL trade with some different rules associated to it. Now, as most of you know, I have some very detailed mechanical rules that I use for my own trading. I take the regular type 1 rules, type 2 rules, and I kind of modify them to make them a little bit more specific to the way I do it. I still stick with the basics, wave 4, PTI over 35, things like that, but I'm a real stickler for details. So what I've done is I've taken the XTL breakout trade and adjusted it a little bit to make me more comfortable trading it. And I've been having really good success over the last couple of months teaching this to our clients in the mentoring and foundation period. Now I know most of you that view the blog, you're long past your mentoring windows, so I wanted to take an opportunity with you guys to share what I've been doing recently with the XTL trade, and like I said, it's been really building my confidence in using the indicator, especially when you have markets that are really choppy. In the last couple of months, as most of you know, I day trade a lot. In the last few months, the market really has had problems with follow through. And when I say follow through, if you take a type 1 trade or a stochastic trade, the problem is the market will rally or the market's going to go in that direction, sometimes only a few points. You might make a couple $100 in the trade before you're stopped out. Well, when you have 4 or 5 trades like that and you're only making $150 or $200 per trade instead of hitting the mobs at 1,000, that really hurts. Because if you take one bad trade and you lose $700 or $800, it takes 3 or 4 of those little trades that only go to their first profit target to, make up for that loss that you had, that big loss. And what's carried me through a lot of these times where the market lacks follow through is getting a hold of some of those bigger trends using the XTL breakout. Now, think about what the XTL breakout is all about. It's trying to find a market at the beginning of a major trend. Now think about, how does a trend actually start? It usually starts with the wave 3. But I want you to think about, how do you know when a market is changing directions? Now, of course, you can think of after a wave 5. When you have a wave 5 top or a wave 5 bottom, the market tends to change trends, and that's a type 2 trade. That's one way to get into a market at the change of direction, but that's only one way. The XTL is the other way to try to get into the market at the beginning of a trend. So what I do is I try to combine the XTL with a failed trend. Now, the way that I do this is I kind of came up with my own rule set for this. The first thing I do, I'm just going to call this Ron's XTL Breakout Rules. You'll have to pardon some of my typos here. As I say in a mentoring, I'm a trader. I'm not exactly a English professor here. The first rule of an XTL breakout trade that I like, it's the standard rule of any XTL breakout trade. I'm looking for the first red or blue bar. That's priority. Even though I'm taking this as kind of an optimized trading strategy, I'm still looking for a first red or blue bar. I've got a daily chart of Google. We had a blue bar back on July 20th. This is the first stage of an XTL breakout trade. Now the question is this a good XTL trading opportunity that I like to see? Well, that really comes down to rule number 2. I like to look for a signal of a failed trend. Now, this breaks down into 2 different patterns. Number 1 would be a failed wave 4. Now, what do I mean by a failed wave 4? That comes down to a couple things. You would have an oscillator retracement that passed 140%. Okay, remember in a wave 4, the oscillator must pull back 90 to 140%. The second thing I would look for would be a PTI less than 35. Obviously, for a type 1 trade, we want a PTI greater than 35. Well, if the PTI is less than 35, that means the trend is probably reversing. The 4 wave is not going to make a new 5th, and the wave 4 is just going to continue. What's the other symptom of a failed wave 4? A broken red channel. Okay? Now, that's a failed wave 4. Another thing that I will look for, now this is kind of an either-or proposition, either a failed wave 4 or I would look for a failed false bar stochastic trade. Now, what that means is we've broken a 62% retracement, or we have a false bar present. Now, the false bar present's a little, I don't want to say tricky, but you have to kind of pay attention to the trade here. A failed false bar stochastic trade. What is a false bar stochastic trade? You're looking for a false bar on top of stochastic indicating an uptrend, followed by a stochastic below 25. That would be a stochastic buy. Well, a failed false bar stochastic buy would be the retracement took out 62%, or you start to see a false bar form below 25. That tells you that the buy signal is no longer valid and you would no longer want to buy that market. If you see that in conjunction with an XTL red bar, you would want to sell that market with a lot more confidence because the false bar trade is failing. That's what I mean by a failed false bar stochastic trade. So let's take a look at this chart of Google with some of these new rules present. I don't have the Elliott wave turned on because a lot of times what I do, I try to keep my analysis pretty simple, and I just stick with the stochastic. Now, take a look at Google. I'm going to kind of squish the chart a little bit here so we can get a little bit of everything worked in here on the screen. If you look at Google over the past 5 months or so, we've got a false bar below the stochastic in June into late June. We had a stochastic sell on July 6th. That wasn't a great one, but I mean Google fell from about $590 to about $560. That would have been a very profitable stochastic sell. We have another stochastic sell setting up right now with some blue bars. Now, a question I get all the time is, hey, I got blue bars and the stochastic is telling me to sell. What should I do? This kind of gets into the rules of my XTL breakout trade. You ignore the XTL blue bars unless you get a signal that the false bar trade is failing. Now, how would I get that signal? A break of a 62% retracement. So what I'm going to do is I'm going to put in a 62% retracement on Google. And where am I going to draw my retracement in from? Should I go from the major pivot? Should I go from this minor pivot? Like everything else, I try to keep this very, very simple. Here's my stochastic sells. Where the stochastic red and blue are completely above 75, I'm going to go back to when my stochastic was completely above 75. That was back here around March 30th. I'm going to take my fib retracement, and I'm just going to do a 62% retracement from this primary pivot high down to the low of the trend right there. Now, what you can see, let me scoot that to the side. What you can see is we have a market that is still holding 62%. Until this market can break 62%, I would not trust this trade as an XTL breakout. Now, you go back to that first bar. The first XTL bar was back on July 20th. I'm going to go ahead, just for reference sake, I'll put in a 150% extension on that bar. It gives me a breakout of about 621. Now, if I get a move up to 621, I still probably would not take it there because it's still close to that 620 level of the 62%. What I would look for is maybe a close above 621.80 and then a bar taking out that high of that bar that closed. So Google could possibly turn into an XTL breakout trade here, but since we're still holding 62%, I'd probably hold off on this market. So let's do this. Let's take this information, the failed wave 4, the failed false bar stochastic trade. We can actually do a scan for this. I'm going to click on New. I'm going to click on Scan. And let's run a scan for this pattern. I'm going to go into my properties. And what I'm going to do is I'll go to Technical Analysis. Let's do this on a daily chart. Now here's the scan that I use for this pattern. Under Pre-Built Set, I'm going to scroll down and I'm going to choose XTL Breakout Up Blue. That means the first blue bar. Now, this is kind of against what you would think. I'm going to look for a blue bar buy, and then I'm going to scroll down to filter number 1, and I'm going to choose stochastic above 75. Now you got to choose the one that says above 75. Don't choose the one where it says NFB. So I'm going to use above 75. The reason you don't want to use NFB is because that means you don't want a false bar present. I don't mind if there's a false bar up there. That actually kind of works into the direction of the market anyway. So I'm going to look for a stochastic sell with an XTL breakout blue up. And then what I'm going to have to do is manually go into these charts and see if it's breaking 62%. So let's apply. All right, now if you look in the background, I'm just looking at the symbols. We got quite a few symbols here to go through. I don't want to go through that many. So I'm going to go back to filter, and I'm going to change my minimum average volume to 1 million shares. That means it's got to trade at least 1 million shares a day before I become interested in it. I'll hit apply. All right, that filters it down to only 8 stocks. I can deal with a list of 8 stocks. That's pretty simple. Let's take a look at Hess. I'll open that in a new chart. And here is Hess. Let me change it to a daily chart just so we can kind of see what we're looking at here. All right, so Hess, as of today, July 25th, has a blue bar. That's a blue breakout bar. But take a look at the underlying pattern of Hess. It's a downtrend, but take a look at where your 62% level is. From that last primary pivot, look at that. 62% is not up till about $57. I'm going to ignore this as an XTL blue, and I'll probably just trade this as a stochastic sell. Now, while we're looking at Hess, take a look at this XTL breakout right here, the red bar. Look what we had back in February, an uptrend followed by a stochastic buy. If I do a 62% retracement from that primary pivot low to the primary pivot high, as soon as that market broke 62%, the XTL is red. This is where you want to sell it. Don't try to sell it here. It's still holding 62%. When that thing breaks 62% right here, let me zoom in. Now, I also kind of use an optimized entry for this. You know, the first close below 62% is right here. Maybe you can trigger on March 29th. You take a little bit of heat for a couple days, but then that thing sells off from that $59 mark, and the market runs all the way down to $44. Actually, I'm sorry, $40. So that's the kind of pattern I'm looking for when we break 62%. This one doesn't quite have it yet. So Hess is not something that I would be interested in. How about TPX, Tempur-Pedic? Here's Tempur-Pedic, same concept, it's a blue bar, but if you go back, here's where we got to draw our retracement from here to here. It hasn't broken 62%. I'm not interested in this one either. How about ETN? Eaton. All right, here's Eaton Corp. Stochastic sell, the last one was back on July 6th. This is one that looks promising because this is stochastic sell again, but here was my last move above 75. I know that you probably want to put your retracement in from up here, but that's not where you put it from. This was the last move above 75. It goes from here to here. We broke 62% right here. Actually, we broke 62% on the 24th, but this was the first blue bar. As far as I'm concerned, put up your 150% extension on this bar, and we've got an opportunity to buy Eaton at $43. I'm going to do a mob from this last intermediate pivot. We're breaking through that mob, so that's a good sign. I'll do a mob from the last minor pivot. That's going to be my next resistance level up at 46. I mean, you've got an opportunity at 43 to trade this at least to 46. If we can break 46, we can go to 52. But it's all based on the break of 62%. This market looks like it could change direction based off of that. This is how I like to take the XTL breakout trades. And if you're looking for an XTL sell, all we would do is we would reverse it. Go in your analysis, XTL breakout down red, and stochastic below 25. You're looking for a sell signal with a stochastic buy, and now it's just a matter of going through these charts and essentially looking for the same pattern. IGT, okay, it's coming up as a 3-minute chart, so I got to pop that to a daily real quick. All right, now IGT, of course, I mean, we've got a stochastic buy, but there was no uptrend in place on IGT, so this trade wouldn't fill the requirements that I'm looking for. Let's see if there's anything else. Here's Delta Airlines. Delta Airlines, let's see. All right, Delta Airlines, not too bad. I mean, it's got potential. Here was the last uptrend. We had a stochastic buy down here. Now, I'm not going to use this intermediate pivot because the red and blue both weren't below 25. I'm actually going to go back and I'm going to draw it from this primary pivot. Either way, guess what? XTL red, we're below 62%. This looks like a good XTL breakout sell as well on Delta Airlines. Take a mob from the primary pivot low. If we can get below that mob, which we would with a 150% extension of that first bar, this trade's got potential as well. You know, you can short it at about 873. Mob from the previous prior pivot back. You know, we've got a target on Delta down at about $7. Follow it with a 6-4 DMA, just like the regular XTL breakout trade is managed. All right, so we got a couple trades on. I'll try to manage these or try to watch them in the next few days just to see what happens. But just wanted to share with you a little bit more about what I've been doing lately with the XTL breakout trade. Be happy to take any questions in the section for questions down there in the bottom. But hope you enjoy the video, and we'll see you for our next installment.